Hello everyone, welcome. Swing trading strategies. This is the first time that I'm presenting this kind of this topic. So far it was Stuart. For those that they might have seen one of Stuart's swing trading strategies webinars. So let me just upload the handout as usual. Save. Okay. Tomorrow we're gonna have the swing trading strategies part 2. So don't hesitate to attend to tomorrow's webinar as well. As usual, I would like to remind you that this webinar is recorded. It's being recorded, so you're gonna receive our recording. Just where is it? You're gonna receive our recording as soon as we're done, and as soon my team and the support team send it to you. Send the recording to every single attendee, not registered attendees only. So let me just can't find my PDF version, my handouts. Give me a second. Where did I save it? And here it is. Perfect. Okay, I'm uploading it right now. So feel free to download the handout as well. And as usual, let me know if you have any questions. I'm here to help. Interrupt me, and I will try to reply to your questions as soon as possible. So I can see 22 attendees. I would really appreciate, guys, if you can give me a thumbs up in regards to the audio and the screen as well, whether you can see the screen as well. In the meantime, I will go through the disclaimer as usual until you give me feedback. So, disclaimer. This material is provided as a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instruments. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investments objectives and level of experience before trading, and if necessary, seek independent advice. You can find the full risk disclosure on our website, along with all the legal documentation that you might want to check. So everything's on the website. Feel free to visit our main website, which is the hfm.com, www.hfm.com. So thank you for the feedback, guys. Welcome once again. Hopefully you enjoy it. Especially for you, Ganesh, and I think for you, Jason, as well. It won't be something really new. It's just you might not been aware that this kind of strategy that we're gonna present is also called swing. So for those that there are experienced traders, these are not new strategies, but you might didn't realize that we call them swing strategies. So let me know in general if you're facing any problem, if you're struggling with any of the 3 strategies that I'm gonna present today. So 3 today and another 2 tomorrow. So that's me. Just skip myself, and this is what we're gonna cover in these 2 sessions. Actually, That would be today. Okay, tomorrow we're gonna see more. So first of all, what is swing trading? Okay, we're gonna go through what we mean by this term, what that term means. Also, liquidity, time frame, and systematic. Also, RSI along with moving averages in order to create our own swing trading strategy. Alternative, another swing trading strategy using Fibonacci, and last but not least, ATR. So a swing strategy, but using ATR instead in order to identify stop loss and target settings as well. So any further questions, just stick it in the box. Okay, so this is a webinar based on a presentation that I have seen from me and Stuart, actually, from one of the most famous traders in the world. I'm not sure whether you are aware of him, Trevor Neil. So we're actually um, um, uh, Trevor, first of all, is a very experienced trader. Has been to the industry for more than 30 years now. Has become a commodity trader at Merrill Lynch in the mid of 1970s. So he's pretty much giving his life in technical analysis. For technical analysis, he's a technical analyst with experience in Bloomberg as well back in 2000. So something that the quote from Trevor over here, which I put on: let no one kid you that you can listen to a free webinar and be given the holy grail. There is no holy grail, just education, discipline, skill, and hard work. And I use this quote because it's something that you should comprehend. We offer free webinars, right? Why not charging for them? But we insist providing them for free because we want the best for our clients. So education is the key, guys. Education, but also discipline. I think this is these 4 words over here is the key for anything that you want to do in your life, for anything for any industry that you want to succeed into in your life. Not only trading. I mean, okay, but in order to succeed on something, you need to educate yourself, okay, to learn as much as you can for that field, to keep discipline. So having your own write down your program or your schedule, stick to it. Don't get greedy in trading, more precisely. Stick on what you see, stick on your plan. Don't let your emotions drive you. And first of all, hard work, right? Hard work on everything we do. Hard work at the end brings results. So, okay, swing trading. First of all, let's clarify a bit what it is. Okay, what it is. So, swing trading, as the name, as its name, okay, you can understand that it focuses on the fluctuations that we're seeing in the market, but short fluctuations. So, by saying the word swing, okay, we're referring to some to short-term changes of the price, short-term trends. So the swing trading is a strategy that focuses on taking small gains in short-term trends and cutting losses quicker. Okay, so this is why it's called swing. Literally because we are referring first of all on short time frames, relatively short time frames at least, and we are focusing on how the trend is changing, how the price action is trading in that particular short time frame. So it focuses on profiting of changing trends in price action over relative short time frame. Okay, so we have so what we have, the people that are swing traders, okay, what they try to do is they try to capture either upswings or downswings of an asset. So that doesn't necessarily mean that by saying short term, it doesn't necessarily mean that I'm referring to intraday um, time frames. Swing trading actually typically is referring to daily charts, to daily time frames. So typically the swing traders are holding the position up to 3 days or even 6 the maximum. So 1 to 6 the maximum. Over here I said 3, that's typical of the day, but in general we have seen, if you search a bit, you can see that the most of the surveys have proved that position are typically held for from 1 to 6 days, although some of them may last longer, but this is upon the discretion of the trader, depending on how successful and how profitable the trade remains. Okay, so I mentioned the word short time frame several times, but we are referring, or actually, the swing trading initially was a strategy created for swings from price for the price action movements that over daily time frames, to be more precise. So as soon a trader finds a swing trading entrance, okay, so it used in a particular way. It's technical indicators in order to check for any candlestick patterns, to check and find out the trend direction and what's the potential, okay, uh, what's the potential of the short-term changes in the trend. So yeah, so this is pretty much what a swing trading is. So so it can be, we might see so before, just sorry, just a second, I've lost the question box. Where is it? Where's my question box? Come on. Oops, was behind the. Where is the question box? Oof, I lost you. Just a second, guys. Sorry. Even if you're asking something, apparently I cannot see it. Give me a second. Is where did I? Where is it? God's sake. Okay, let me just And I officially lost the question box. Where the hell is it? Oh, okay, found it. Sorry. Okay, sharing again. Need to put it. Okay, here it is. Okay, so I didn't have any questions. That's good. So just to draw a bit, think about swing trading as something that is looking like that, like a zigzag. That's why I mentioned over here zigzag or ABC formation and or 1, 2, 3 formation. So when the market is like tumbling, okay, either in a ranging market, either in a trending market, but doing some swings, temporary swings, short-term swings, either as a correction, either um, as a just an immediate taking the profit condition and etc. So it might be like that, might be like that, but we're seeing this tumbling, these swings. So for something like that to happen, it means that the asset is quite volatile, it has a lot of liquidity, and in general. So have in mind that swing trading strategies work better if we have a liquid and volatile asset. Okay, it doesn't work that good if we lack of volatility or if there is a low liquidity in the market. Okay, liquidity is a friction of profits like commission or tax. So, okay. So yeah, we have already covered some of them. As I said, typically is being used, widely used and created based on a daily time frame. But because as the explanation that I gave earlier presents, what we are focusing on, what we aim to succeed in a swing by applying a swing trading strategy is to profit, right? By taking actually to profit from small gains in short-term trends, okay, or cutting losses quicker. So that's why the entry or the exit will not be based on the daily chart, but in a shorter time frame. The overall, the analysis, the direction of the trend, the momentum will be done by analyzing the daily time frame. But in order to identify our entry level or exit level, we're gonna go down to shorter time frames. Is not used by mean reverting day traders or long-term investors. There are some people that they are using it, that they might actually not using. They might look on higher time frames such as weekly and monthly in order to identify the overall outlook of the asset. We're gonna see that tomorrow, but yeah, this strategy works, as I mentioned, in a daily time frame by taking entry on this short-term fluctuation. So the entry and exit will be identified in a shorter time frame, intraday actually time frames. Have in mind that trend is our friend, okay? So if you decide to fight the trend, you need to make sure that you will do it for a short time period. What I mean, if your overall trend, I mean daily basis, okay, you can see the asset is moving upwards for many days. So obviously the direction is to the upside, but you decide to go against the trend because you identify in the short term, maybe in the 4-hour chart or in the 1-hour chart, a pullback. It's fine, but as long as you set your stop loss and targets at appropriate level before the rebound happens and the asset turns back on the overall direction, if you get what I mean. So ideally, we're gonna see 1 hour, 4 hour, and daily. These are the typical time frames, and this is what we're gonna see. And holds for a few days, as I mentioned, 1 to 6 days maximum. Typically, okay, obviously, if your asset is still trending and there is it remains profitable, so like for example with this dollar yen over here that it has been to the upside since March, you might consider keeping this kind of positions for longer. Now, it was just a tiny, just short. Okay. So remember that the market works as actually we can see in the market, as we have seen as we have said in the past, the theory of house. I'm not sure how many of you are familiar with the theory of house, but what we mean, the market is self-repeated. So if we had this up and down, let's say in a daily basis, okay, if we zoom in the 1 hour, 4 hour, or 30 minutes or 50 minutes, we want to see the similar swings, down, up, down, up. So market is repeating itself in different scales, okay? And that's where the swing trading strategy is based on, and along with many other strategies, okay? We have seen in the past that fractals is an indicator created due to this repetition and self-repetition that the market presents. Okay, remember the example that I show in the past in regards to the broccoli. I'm not sure how many have been to those webinars, but nevertheless, okay, I'm not gonna get it more complicated. So it's repeating itself. It's following a cyclical rhythm in several time frames, and so on and so forth. So just that's just informative. Okay. So as every single strategy, as every single plan, remember that in trading you need to have a plan, you need to have a more systematic approach, a structure. Okay, so if you're thinking to try this kind of strategy that we're going to present today, you need to be as disciplined as possible and as systematic as possible. Okay, so you need to set your how can I say it? You need to set your goals in advance, what you want to achieve. So rather than targeting, let's say 20% or 25% profits, then it's better to have more modest goals. For example, a 10% profit goal, or even just 5% if you are about to trade or apply swing trading in a more tough market. What I mean by tough, you know that we have assets that are extremely volatile, such as pound yen. So you need to be reasonable. You need to consider taking profit goals that are modest. Don't overdo it, okay? Those types of gains might not seem to be the life-changing rewards that you're looking at, but it's the way to remain in the market, to remain on profit, and slowly to increase your profits. Okay. What else I wanted to highlight? So we're gonna see the system. So we're gonna see how you can adjust in your system some particular indicators, but these are the 5 steps that you should always have in mind and to prepare actually before you take any profit, either if you are using swing trading strategy or not. Have a system, trade your system, so remain disciplined on your system. If you have lost, accept your losses, because anyway you have predetermined, okay, you have predetermined your loss. What I mean by that, when we saying that, guys, we need to set some goals. You need to say, okay, every day I want to, or every week I want to profit 5%, and I'm okay losing 3%. So these are goals. This 3% loss that I have set in advance and say that, okay, if I about to lose, I don't want to lose more than 3%. So these goals will keep you disciplined. And the 3% that I mentioned is a loss that I'm okay with, that I accept. We cannot be perfect. We cannot win all the time. We cannot predict the market. So you should consider setting a loss target or a profit target that you accept. You are willing to lose if something goes wrong. Always back your winners. What we mean, use multi-targets, with lock profits with this way. Use trailing stop. So locking profits, this is something that will help you. So, and repeat. These 4 steps are essential for every single trader. Now, I spent a lot of time on introduction. It's time to start, I think. Isn't it? So, strategy number 1. Swing trading strategy using simple moving average and RSI. So, just quickly, I'm gonna skip this slide. Just quickly, okay? This is an example. We're gonna go through it later on, but have in mind that we need to follow 4 steps, okay? 4 steps. Once, actually, okay. So you need to write down actually your diagram. 3 most important points before you trade an entry, after you have analyzed the market, is what? Obviously, to identify our entry point, our exit point, and our stop loss, right? Before we open a trade, after we have analyzed the market, we have decided the direction, we have spotted the direction of the trend, the momentum, and etc. We need to identify 3 important things: entry point, exit point, and stop loss. Any swing trading system should include these 3 key elements. So let me take a step back again. Come on. Okay. Here we are. Okay, here we are. So the very first thing we're going to see is one of the most popular anyway. I think all of you using moving average or RSI. So one of the most popular swing trading strategy involves the use of simple moving averages. Remember, simple moving average help us to identify the trend, any pullbacks, okay, and RSI on the other hand, it's gonna give us, other than confirm the trend direction, it gives us also momentum. It gives us signs in regards to the momentum. So suggested period for swing strategy using simple moving average and RSI is RSI 7, okay, while using the 7, which is a very tight one, you know, because the RSI 14 is the default one, but we are interested on short-term fluctuation. So the entry, as I said earlier, is based, the entry index is based on swing, on short-term movements. So that's why RSI is at 7, is for a short-term usage. So any overbought or oversold indication will be identified at 35, 65, and 50. These are the 3 levels that you need to observe on the RSI. In the meantime, we're going to use the 7-period simple moving average. So how this plan is, what this plan suggests is, as long as we have applied these 2 indicators on, okay, a buying signal will be if the price is firstly above the 7 simple moving average and RSI is above 35, moving higher. A second buy, a second long entry could be considered if we see RSI turning higher than 50 and pointing still to the upside. Okay? So good candles are best. What I mean by that, if we we see full body candles or quite strong candles, that's even better for us because it means that momentum is strong and and the asset is likely to continue the direction that we have spotted for quite some time. That's why I'm saying that the size, the wicks, they matter. Okay, so trailing stop in this kind of strategy will be the lowest low of the last 5 candles and the lowest low of the last 2 candles if we have taken a second entry. Okay, any reversal, if we're in a long position, any reversal means that we need to exit or it's time to sell if we haven't taken a position. So we can flip as well. What I mean by that, if we have already taken a buying position, okay, but we have seen the asset reversing and we started and we were considering a sell position. So okay, so and let's assume that we have closed everything. We have decided to go short on the correction that we might see, on the twist to the downside that we might see. Then our a possible entry point to the upside again, a possible buying long buying position in the future could be on the stop above high, okay, on the stop loss above, on the stop above high of RSI signal bar. What I mean by that, actually I'm gonna show in a chart anyway. So yeah, we're gonna see that in a bit. Okay, so give me some time. Okay, this is if in the case that we are looking for a move against the trend. Okay, let me skip it for now. Let's have a look on the example and I'm gonna get back. So this is okay, obviously a very old example back in 2020, but I have plenty, so I'm sure that you can understand what we mean. So RSI at 7, simple moving average 7. This is a daily chart for euro. So remember that we said that first of all, one condition to go long is if our asset has managed to move above the moving average, and this is what happened over here. It was the first time that it closed above the 7-period simple moving average. Now, okay, let me get back again. Right, here was, remember the criteria, price above 7 and RSI to give us to be above 35 and rising. So let's get back again. So here we are. So the price moved above the 7-period moving average, so the 7 days moving average. But if I go down and check the RSI is at slightly above 38. So that's good because it's indeed above 35 and pointing upwards. So our two criteria are met. So we could open a buying position here if it was something that we had identified. So the next day we could, as long as we see this confirming, the next day we could open our long position. If it's something that we have missed, we might see a second opportunity. A second opportunity will be if the RSI continues to move higher above 50. Okay, so that happens somewhere here. You see RSI 7 moves up through 50 and we are above. So that could be a second possible long position. Or if you were from the people that they have spotted this from the very first time, you could add to your existing position over here, because over here we have RSI turning above 50 as well. So you see, pointing higher. So you can add on your existing position. Remember what I taught you about stop losses. So, and I didn't mention targets, but let's get back. Here we are. So you can either use trailing stop, okay, by using the very first trailing stop being 5 candles away, and more precisely at the lowest low of the last 5 candles, or at the lowest low of the last two candles. Okay, so let's see. So, by the way, just to highlight the reason why we said trailing stops either at the lowest level of the 5 candles or at the lowest level of the last 2 candles is because this swing trading strategy, this simple moving average and RSI 77 with these entry points, it looked, so it has been identified that it works better using 2 stops to exit. Okay, with this way you are locking profits and you are limiting your losses. You're cutting your losses. So it is this strategy is it can be used using 2 stops, trail stops, but 2 stops. Okay, so that's why we have 2 steps. Okay, here it is. This is the key phrase. The purpose here is to have a tight stop to secure a high probability profit, and the other to go for the big one. Okay, 2 stops, one that is wider, the other one that is tighter. With this way, we are cutting losses, but at the same time, we are increasing you are securing the profit, the high profitability profit, and as our second position and our second stop is going for an even bigger profit. Okay. Okay, so like in this case over here, the lowest low of the last 5 candles was this one. So that could be our first stop loss. The second stop loss could be on on the last two. So that would be somewhere here. Okay, the last two, because of the second position. Okay, so this is it, these two stop losses. We're gonna see more examples, so don't worry about it. Yeah. Okay. Okay. These don't confuse yourselves. These lines, okay, they're just sorry. There are the trailing stop that we use. So real, just let me take a step backwards. So we have said that the first stop loss, let's concentrate on the first stop loss, okay? Are you all with me? Are you okay so far? If not, let me know, please. So we have set this as our first stop loss. Why? Because it's the lowest low in general. It's the lowest low of the five candles of our latest five candles, and then in general the lowest low, is the lowest low as we said. But it's a trailing stop, right? We haven't used a fixed stop in this strategy. We're using trailing stop. So as the price moves higher, the stop will move along with the price, okay? And this is what you're seeing over here. The red line is the first trailing stop that moves along with the price. The second stop loss is the blue line. So in this case, okay, this example is a bit tricky because we can, in this example, we have the lowest low of the last five candles and the lowest low of the last two candles is pretty much the same. Okay, it's very, really close. So the other stop loss, it's this one, which is really, really close, right? Because we are taking just the last two candles, and this is the latest low of the last two candles. We're taking the lowest low of the last five candles. This is it. So they are really, really close to each other. So over here, this is what you see. You see with red the trailing stop loss number one and the trailing stop loss number two. So an exit position will be our very, very first exit. The closure of the position that we have taken here will close here automatically, unless if you wanted to do it manually, but I mean, before it kick the trailing stop, but why to do that? So it will close automatically here, as you can see, because the asset suddenly turned down, hitting the stop loss number one. So we locked profit. We locked all these profits. The second target, okay, sorry, the second position, remember that we have added to the second position. We have taken another entry. Over here. If you don't necessarily need to add to it, okay, but this is how this strategy works. So the exit position number two will be this one. So you see, doji, and then down and closed. You will have profit this much. Anyway, if you have done the procedure properly, you have set your stop loss, you have added to the position, etc. Because you have stop loss, you don't really need to worry, because these will close automatically. Okay, so here is another example. Okay, so what we have here, we have daily euro dollar, RSI, but in this case, let's do a short example. The previous was a long example, long entry example. Let's do a short one. So it's the same criteria, but vice versa. Okay, so here, okay, our asset was tumbling a lot. Okay, I will not give this as examples. I will show you as an example this one, just because it's clearer. But obviously you could have a long position over here, a short position over here, another long position here, another short position here. It's not that they won't be triggered, they will be triggered, but I will focus on this one just because it's a clear trend. Okay, so I don't want you to be confused. So over here, the asset was moving for 1, 2, 3 days, like around the moving average, so we didn't have a clear direction. Over here, it closed on the moving average, and the next day, it closed well below it. Okay, and this is where we decided to take an entry. Why? Because you can take a short entry as soon as your asset is below the RSI, the 7 moving average, sorry, but at the same time, you can either see the RSI moving below 50 or even below 35. So over here, we didn't have these signs. Over here, it was a bit of a more complicated, but here is when the both criteria met. So RSI, candle below RSI, moving average, it was at 50. The next day, though, it confirmed and declined below 50. So this is where we could take our entry, either on the breakout of this latest low, or as soon as we spotted in general that the RSI is falling below 50 and is pointing downwards. Okay, as soon as you spot that. So if we have taken this, okay, let's go along with the example. So if we have taken an entry at the blue line over here, that was just the entry that I have taken, because I have noticed that for a second day it's moving below the RSI, but more precisely, I have confirmed that my RSI is dropping below 50 and is pointing downwards. That's why I took this entry. So now, stop loss. Stop loss, we set the if we are about to enter a long position, is the lowest low of the last 5 candles and the lowest low of the last 2 candles. In a short position will be the highest high of the last 5 candles and the highest high of the last 2 candles. So that means, so we have 1, 2, 3, 4, 5. Okay, so the highest high, it should be somewhere here, this one, and the highest high of the last 2 candles, it should be this one. So ignore these lines. I know that they are confusing, but it's my mistake. So stop loss, okay, stop loss. So number 1, number 2, entry was taken here. You can add to the entry again here or here or here, up to you. And as you can see, it will move, the stop loss will move along with the trend. And as soon as the asset start turning higher, it's gonna kick our stop loss. If it doesn't close automatically, you can close it as soon as you see it breaking above the moving average. However, it will close automatically sooner or later. So the lines that you're seeing, okay, they're due to, it's because I wanted to do another long position. So these lines is the entry, the target, and the stop. If we have open a position over here on the break above, the move above the 7 moving average, along with this move above 35 towards 50, okay? The lines are for a short position, for a long position here, but I wanted to show also a short position, that's why. Now, swing trading strategy number 2. We using Fibonacci retracement patterns. So the Fibonacci retracement patterns can be used to help traders identify support and resistance levels, right? And this is how we're going to use it. So we're going to use Fibonacci's, we're going to use the Fibonacci levels, and more precisely the 38, the 50, and the 61 as our support and resistance levels to set up a potential trade. But what we need to do firstly is determine a trend. We need to make sure that our asset is trending. It's not ranging, it's trending. So this is step number 2. Afterwards, we're going to see, we're going to identify the 3 important Fibonacci retracement, and at any pullback, we're going to use them as support or resistance levels in order to set up a potential trade. Along with the Fibonacci, we will use also an oscillator in order to trigger the trade. I'm going to explain right now what we mean. So these are the steps. First of all, determine the trend direction. You can use either you can just observe your candles if you want in a daily time frame. So we remain in the daily trend time frame, as you have understood. Or you can also add a 20 simple moving average, 20-day simple moving average, in order to confirm the direction of the trend and the slope in general. Okay. Now, as soon as you do that, then you need to measure any pullbacks that you have identified using Fibonacci. So let me just okay. So what we need is 20-day moving average, Fibonacci, one oscillator or 2, up to you, either stochastic or MACD. But if you're gonna use MACD, use the default settings. If you're gonna use stochastic, use these settings, the slow settings. And for our stop loss, we're gonna use ATR. So in this one, we need quite plenty technical tools. So we need 20 simple moving average, we need Fibonacci, we need either stochastic or MACD, and we also need ATR, okay? ATR 10, by the way, not 14, 10. What else? And for the ATR, we're not gonna use just the ATR. I mean, if the ATR presents, I don't know, 50 points, we're going to multiply ATR by 1.5. So we're going to use 1.5 ATR as our stop loss. So for selling position, for short position, we're going to multiply ATR by 1.5. And to set it below the trade, below the entry. For buying position, we're gonna for short position, we're gonna set the ATR above the entry, and for buying position, we're gonna subtract the ATR calculation from the high of the candlestick reverse for sell trades. So let's have a look. Here we are. So what we need to do first, spot a trend, right? So we have identified that we have an uptrend, right? So what we do? So we are placing the Fibonacci, okay? Sorry. So we have placed Fibonacci number 1 on this upwards movement, okay? So here, so 100, 61, 50, 38. So it pulled back down, okay? So we're trying to look for Fibonacci clustering, okay? By the way, our asset moved up, and over here it moved above the 20 day moving average, right? It's sideways over here, and then a pullback below the 50, closing below the 20 as well, and closing at the 61.8. So I will get the backwards. So remember that we need to use Fibonacci in order to measure the pullbacks from the trend. Okay? Oops. So we have been in an uptrend, but we have seen a pullback that closed at the Fibonacci level. So that looked to be a nice support area. Okay? However, we had a bit of a swing over here. So it closed here, but it had the lowest low over here. Right? So, what else I wanted to say? Yeah. So these pullbacks could be used as nice entry points. Okay, so it found support. The next day it rebounded, closing above the 20-day moving average. But you need to always check your oscillator as well. So our oscillator over here, okay, despite this pullback, okay, is still it flattened a bit, but we have seen a bullish cross over here. So it keeps, so there is a bullish cross and started to turn higher again. So it means that we're gonna see a continuation of the uptrend, right? So that could have been a nice entry point here or here. So as soon as we are have a confirmation that it was moving, it will move above the 20 moving average, or we're going to see this confirmation that with the asset closing above our next immediate Fibonacci level, which in this case is 50. Remember that we said about ATR, right? So you can use ATR 1.5 of ATR as your stop loss, as your trailing stop loss. So if in this case that we were looking for a buying trade, we need to subtract the ATR. Okay, so based on what the ATR it is, okay, multiply by 1.5 and set the stop loss. Let's assume that ATR was, I don't know, okay, I don't have ATR in this example. Let's assume that ATR was saying in the daily chart, I don't know, 50 pips. So multiply by 1.50 equals to 75, is it? Am I wrong? Yeah, 75. So if you have taken your entry here, you need to measure 75 pips below. So you need to put your stop loss somewhere here. But this is just an example, okay? Just to make you understand. And it's a trailing stop. So as the asset moves higher, it will continue moving higher along with the trend. Now, as soon as it reaches, the asset starts dropping like here, it will eventually automatically close. This is another example. Now it's a better example, to be honest. So we had been in an uptrend, right? We have seen it, that it was a strong trend. It peaked over here. So we have put our Fibonacci on, and we started seeing. So the asset was moving above the 20 until it peaked over here, and it was like tumbling. So moving up, retesting again and again the 20 moving average for few days, actually 2 full weeks nearly, until it eventually dropped. Okay, dropped down just a breath away from our 50 Fibonacci level, the previous based on the previous trend, right? So what we have over here, a strong pullback that stopped at the 50 Fibonacci level. Okay, so that means that we have a nice strong support over here, and possibly the beginning of a new trend. So uptrend, downtrend, so correction that has found support just above the 50 Fibonacci level of the previous strong long uptrend, right? So we need to do what? We need to set another Fibonacci over here on this down leg. So we have put our Fibonacci. What we are waiting to see, we are waiting to see whether it will sustain this floor and whether it will rebound and move above our 20-day moving average, which indeed did it. So it rebounded, consolidated a bit over here until it finally crossed above the 20-day moving average. So that was a buying position. Okay. With targets either the 50 or the 61.8 Fibonacci level of the second Fibonacci retracement, by the way. And stop loss, as I said, you need to use your ATR. Let's see an even better example. This is okay. This is Apple daily chart. Okay, so let me zoom in a bit in order for you to see it. The red line is our RSI. We have put the first Fibonacci. We have a pullback over here as well. So remember that you need to check whether the asset is above or below the 20-day moving average and whether your RSI agrees with a potential short position or long position. So the asset move and close below the 20 moving average over here. Okay. At the same time, RSI was showing bullish. Oh, sorry, was here. Yeah, it was still at 70, so we couldn't really convince to take a short position over here. It extended lower for 3 days in a row, and this is when the RSI started falling. So that could be a possible entry point. Let me put so that could be a possible entry point to the downside. Okay, with targets your previous Fibonacci levels. So target could be at 38.2 at 50% of the previous major up length. ATR stop loss, trailing stop loss, check your ATR, multiply by 1.5 and add it on the entry. So if the entry was here, stop loss should be somewhere here based on the ATR. So ATR was back then, let me just zoom out. So ATR was very, very briefly, guys. What was it? Is it 2? 2? Mine was 2. Let's assume that is 2. Multiplied by 1.5 is 3. So if the entry was at 140, okay, it's not clear either. 140, oh, what was it? 150? So I assume this is my stop loss. My chart is not clear, so the trailing stop loss. So we'll move along with the trend. Now, if we miss this down leg, then it's fine. We can wait to see whether it will find support. And as soon as it finds support and rebounds and breaks the 20 moving average, the 20 with the purple, by the way, pink, whatever it is with the purple, we can put our new Fibonacci level and we can open a long position as soon as we see the asset above the 20-day moving average, if and only if RSI agrees on a bullish signal. And yes, it does agree because it's sloping higher and it broke the 50 level as well. So this was a nice entry point, this candle over here at the closure of this candle, because it's close above the 20, RSI was at 15 rising, and we had this rebound. So we have seen that this pullback ran out of steam, and we have the continuation of the trend. At the same mentality, you can put your trailing stop loss 1.5 times of ATR. So stop loss should be somewhere here. Okay. Interrupt me if there is anything that you don't understand. Are not great examples, they are not very clear, but I think they are simple enough, right? So it was in a long uptrend. At some point we saw a bit of a correction of a pullback. That pullback found support over here with this consecutive 1, 2, 3, 4, 5, 6, 7 candles. We had a strong rebound. And what will happen? So, okay, let's put our Fibonacci. Nice, nice strong rebound, breaking significant Fibonacci levels, and also moving above the 20-day moving average. Okay, so that would be a nice entry point. Also, the previous candle could be a nice entry point. Why? Because we could see that it was actually no, that should be an entry point. Yep, that or that, or even that one where we have the confirmation. Okay, either the breakout of this immediate high, or either that one that coincides with 38.2 Fibonacci level. So you can use Fibonacci's as your potential entry point. So you have seen that it's consolidated for many days, but found support over here. So you need to wait for a nice strong breakout of your Fibonacci levels. Okay, and more precisely 38.2 or 50. Either of these two work as nice entry points. Yeah, so stop loss will be again based on the ATR. Long position, you can use the Fibonacci extensions as your target level. So over here in this example, I have used the 161.8 Fibonacci level as my target area, or alternative, you can remain on the market as long as your trailing stop hasn't been triggered. As soon as that your trailing stop has been triggered, it will close automatically. Always dangerous buying below your target. Yes, I agree with you, Aondo. That's why it's preferably to wait for a confirmed candle that will close above the 20-day moving average. Yes, I agree with you. It depends on how tight you're gonna set your stop loss, but yeah. Yes, I agree. Preferably wait not only for the break of the Fibonacci levels, but also for the move above the moving average as well. This is another example. Is it? Yes. It's the same example actually. You see that it kicked it kicked my target, the 161 Fibonacci. So guys, you have two alternative target targets. You can either set your stop loss and trailing stop loss and wait until they've been triggered and close the position automatically, or set target as well on top of a trailing stop. So use your trailing stop, but also add a target. So you can use the Fibonacci extensions as your targets. So over here, we have used our target number one, the 161.8 Fibonacci extension. It was triggered, but as soon as it was triggered, we have seen a pullback. However, on the pullback, the on the pullback, the asset remained above the 20 moving average, but it managed to close automatically over here. So this line that you are seeing, this green line, it was my trailing stop. So it don't close automatically here. Then a new pullback created. So we can add a new Fibonacci, and as soon as the asset confirms a buying entry, what I mean by that, okay, it's anyway, it remains above our 20-day moving average, but we need to see our RSI, whether our RSI is above 50 or 35 in order to enter again long, or even to add to our existing position, but this time with targets at the new Fibonacci levels, 100, 161, 261, and so on and so forth. Okay, so you can play with it a bit. There are a lot of ways to do it. Daily, again, another example for HP, Hewlett Packard. So what we have over here, it was in a big bullish market. Eventually, it dropped significantly, right, until it stopped dropping over here. And then we had consecutive bullish candles. So, okay, let's put our Fibonacci on and wait to see what will happen, right? So what happened? It turned back down again, posting lower lows. So so it wasn't, it didn't triggered, it didn't posted, it didn't moved higher, it turned back down again on the bottom of the previous bottom and extended even lower, posting a new low, right? So it wasn't really something, okay, it was something that you could trade, but yeah, it was a bit mixed. It was up, again down significantly, reversing all the gains, then up again, reversing all the losses, and down again. So it was a lot of mixed picture over here. But okay, we have spotted a pattern in this case. So it's good if you spot a pattern, by the way, add your lines on, okay? Because it's another way to identify your next entry. So if you haven't taken, let's say, an entry over here, and you have identified this pattern, connect your highs, connect your lows. And by connecting, you might identify something new, okay? Put your lines on. So what we have spotted over here is, and why the reason that why I kept the previous Fibonacci is because we have identified some kind like a downwards channel, a bit of a, I don't know, yeah, a downwards channel. So lower lows, lower highs, and it was moving a bit sideways, a bit dodgily, until it finally broken the upper line of my channel over here. What that means, so we have, for the first time of the last 1, 1, 2, 3, 4 months, our asset, this was a 4 months channel, our asset managed to exit this ranging market, this channel. So that was a nice entry level. Okay. And what we need targets. We need to identify targets. You can either use as your targets the previous Fibonacci levels, okay, or your new Fibonacci levels. So you can apply a new Fibonacci level on the latest swing and use their Fibonacci extensions. In this case, the Fibonacci number 1, the 50% Fibonacci number 1, was in agreement with the 161 Fibonacci extension of the latest Fibonacci. So that means that's a strong resistance level. So that's an appropriate and strong target. Okay. If you want to add multi-targets, you can consider as your next target the 61.8, or as the very first next one, this 261 Fibonacci extension. But as I keep saying, don't overdo it. If you're gonna add more than one target, then risk the, let's say, if you're gonna add two, put the 70 or 80% of your risk on the very first target and leave only the 20 or 30% of your position for target 2. If you're gonna add 3, so this should be 60, let's say, percent of your risk. It should be another 20, and this another 20. We have talked many times on how you can use multi-target and sort out your risk management appropriately. ATR, I'm not gonna, okay, I'm gonna speak about ATR actually. If we, let's assume that we have enter long over here, on the closure over here, okay, let's assume that this is our entry point. So I need to measure ATR that moment. Okay, cannot be precise, it was somewhere here, and that should be somewhere like, I don't know what that's this. I'm just guessing it should be, looks to be a bit in between. So it should be somewhere around 90 points, 0.90. So 0.90 multiplied by 1.5, that's a 135. So I need to measure 135, 135 points below, pips below my entry level. So that means that it should be somewhere sorry, it should be somewhere around so if this is, so this is 30, this is 31.30, so that means that this is somewhere like 3070. So 3070 minus 1.35, that means 29. So yeah, my trailing stop should be somewhere here, and it will move along with the trend anyway. Okay, so guys, we have reached to the end of our webinar. I'm gonna present tomorrow the rest of them. I just want to make sure that you are okay so far, because I haven't seen any questions. Only Aundo that commented, very well commented, that buying below the target that's simple moving is a bit dangerous, and he's absolutely right. So the more confirmation you have, the better. So if you don't have any questions, I'm going to call it a day, then we're going to continue tomorrow with the rest of the strategies. Hopefully you find it interesting. Remember that if you have any questions that you might don't want to say out loud today in our question box here, feel free to send me an email at webinars@hfm.com. There is no like a best or worst, to be honest. What you need to do, my dear SMEGA, is apply both, because let's assume for gold, the simple moving average one with RSI might work better for daily gold chart, while the Fibonacci one might work better for currency pairs. You know what I mean? It depends on the asset rather than which is best and worst. It depends on the asset. Okay, so that's why it's good to check a bit, apply apply them on the chart, and looks which one, if you go backwards on the historical numbers, I mean backwards in your chart. Okay, let's assume, okay, this is dollar yen. I want to just test. Okay, so I will go here, let's say, and see which one gave me nice entry points and exit points, and which one, if I have taken the entry, will have been like good for me and gave me correct signals, accurate signals, and so on and so forth. So you see, test a bit backwards and to see which one were better. Okay, per asset. Okay, so yeah, that's my can we see your face? I'm in Facebook and Instagram and YouTube every week. Okay, Osemek, anyway, I'm gonna have a Facebook and YouTube live tomorrow. Sorry, is it tomorrow? I'm confused a bit. No, Thursday. What am I saying? On the PCE announcement. So join me on Thursday. We're gonna host a Facebook and YouTube live, discussing together, doing a live analysis on the US session on Thursday. So over here, I have my camera on. You can see me. We can see together the markets. I can analyze every single asset that you want me to analyze. Yeah, I will be happy to see you either in Facebook on YouTube, and you can we can go through the charts together. Samuel Kelly, so these swing strategies are for simple moving average. If you want to amend the ones that I have presented, try it in a demo account, make sure that it works for an exponential moving average before you try it in a live analysis one. These strategies that I show, they work only if you follow exactly their steps. But you can test it yourself, check whether it works or not, and adjust it on your and adjust it accordingly. Luku, I don't need to send you the link. I mean, if you visit our Facebook or YouTube channel, you will see the event there. So if you're following us either on YouTube or in Facebook, you're gonna get an alert. You're gonna get a notification. Okay. Yeah. So either subscribe to our YouTube channel or subscribe to our Facebook channel, and as soon as you do, you're gonna get an alert for every event that we are hosting and every live analysis that I'm presenting. Okay, I can share the YouTube event with you. I won't share the Facebook event because I don't know where you're placed. I mean, each one of you is placed in a different country, so let me share with you the YouTube event instead. Come on. Give me a second, sorry. Yeah, but anyway, if you're subscribed to our Facebook or YouTube channel, you're gonna get alerts. So have this in mind. But come on, this is it. Let me share it with you. Get a shareable link. Perfect. Send to all. Okay, I've shared the YouTube one, guys, for Thursday. I decided to do it Thursday because it's the end of the month, it's the end of the quarter, the end of the half year. So it's a very, very significant day, and we might see a lot of repositioning. Okay, so thank you for attending. Have a great day ahead. Anything you need, you can find me at webinars at hfm.com email address. I'm here to help me, Stuart, all of our analysis team. So feel free to contact us anytime you want for anything you want. Okay, thank you. Have a great day ahead. See you again tomorrow. Bye bye.